You're listening to Mind Over Money, presented by Waymaker. Hey everyone, we're back from holidays and today we're diving in with a quick Q&A to answer some of the questions from episode 7 where we talked about great investing advice. So if you haven't listened to episode 7, go back and check that out after this episode. My name's Lachie and I'm joined by financial advocate and advisor Archie Franz. G'day Archie.
G'day Lachlan.
Q&A day today. Exciting.
Yeah, it's nice to have some questions.
Yeah. So we'll jump right into it. Now, we're not going to read out names for privacy, but we've compiled some of the questions from our community and what you guys have been sending us in. And a reminder, you can send us your questions at any time. Our email is in the show notes. All right, Archie. So the topic of this Q&A is investing. And the first question we have is on interest rates. And the question is, interest rates are going up. How is that going to affect the share market and property? Thanks.
Awesome. Yeah. Thanks for sending in great questions, guys. We really appreciate your questions. So when interest rates go up, investors start looking for a higher return on their money. That's a simple answer. So share prices are affected because it's based on how people are perceiving whether they're getting bang for their buck. So bang for buck just means, am I going to get enough money, enough return on my capital invested? And it is perceived. So we're looking at different businesses and deciding, is this business going to give me enough return in the coming years, based on how much money I've got to invest in that company or in that business. And that's the share market. The share market's all about businesses, and it's all about what those businesses are doing and how people are perceiving them. When we look at the property market, the price of property is again affected by our perception of value. Are we going to get value for our dollar? And we're seeing some pretty crazy stuff in the papers, in the media at the moment about higher interest rates, a lot of negativity and stuff. But the reality is that, higher interest rate can actually be a benefit to someone that's negative gearing. And for someone that's, paying off their own home, a higher interest rate is going to cost more. So there's two different people in the market and two different ways that's going to affect the market for them. So we might see more investors actually coming into the market for property, whereas it's probably been more of a, people buying their own home at the moment. Again, all about perception. So I always encourage all of us to put aside all the media hype and, start to get some advice and start to look at things for your particular situation and what's going to actually work for you. And that'll stop you worrying about all the rubbish that's out there.
And we'll actually talk about this more next week. We'll do a whole episode on interest rates because that is a bit of a hot topic right now. Okay, let's keep them going. Second question is, how do you decipher what is actually investing versus trading? Because there's a lot of things out there that look like investing, but they, I don't know if they are. That's the question.
Yeah. I think the easiest way to answer this one, from just a day-to-day perspective is, if I'm a manufacturer, say I'm Apple and I'm manufacturing computers, I need to resource the materials. I'm going to need commodities. I'm going to need precious metals. I'm going to need, computer chips. There's a lot of stuff that's going to go into a computer. And so I've got to be able to access that stuff. I've got to know how much I'm going to pay for it. Then I've got to, work out my price to sell my goods at. So there's quite a lot that's got to go on there. And so what we find is these big trading, I wouldn't say they're like a platform, but they're a place where the big companies, governments, there's the guys that dig it out of the ground, and then there's the guys that are going to produce something out of it. They all need to work together. So they need a way of actually moving goods from one person to another person or one company to another company. And of course, what happens is when people see this and can see that they can speculate on this stuff, they can start to trade and go in there and buy and sell, because that's what trading is, buying and selling, and try and make a profit. But if you and I go in and do that, we're up against these big companies, governments. Are we going to be able to do well out of it? Well, it's basically gambling.
Yeah. And we see that with Forex as well, with the foreign exchange currency, people getting into Forex trading, and most people are just losing money do it. And
Yeah.
it kind of ruins it. Like you said, these platforms are designed, these systems have been designed for companies to do business.
Yeah.
And then you got these traders in the middle kind of ruining it for everyone, trying to make money off it.
Yeah, mucking around. So it's the same with cryptocurrencies. These things they're there for a reason, but then once people start playing with it and trying to trade with these things, and look, they're easy to sell. They can look fantastic. If I want to make $1 million, the best thing I could do is probably create a trading platform for one of these things and then just start selling it, because it would sell like hotcakes. Because there's a stack of people out there that think they're going to make money out of it.
Yeah.
Whereas for me, no, let's leave it up to the manufacturers and the miners and the producers. Let's let them look after their things that they've got to look after, and that's where the trading comes in.
And what about investing?
Yep, for us, investing is what we can do that will actually create wealth. And so that means buying shares in the companies who are producing the Apple computers, buy shares in the companies that are digging the stuff out of the ground, buy shares in the companies and the businesses, that are actually producing crops and producing goods and services. That's actually where we make our money. And that's investing, because you're creating real value. Trading is just buying and selling, and, someone's got to lose for someone to win.
Yeah.
Whereas investing, everyone wins.
Yeah.
We're creating legitimate products, legitimate services based through legitimate systems. That helps remove fraud. That helps remove the likelihood of people losing their money. We see all the bad stories, come through in the media because they sell well about people losing their money. And that's just because someone's, done something fraudulent and taken advantage of people. But real business, real investing, it's very legitimate. It's very safe. And because, governments have a vested interest in everyone doing well.
Yeah.
Even though we might think our governments don't have a vested interest, they do.
So we're reaping the share of the benefits from the money we're investing in. So companies are doing good work, they're creating an income, or they're getting a profit, which is the income we receive, and we get the equity growth as well of that company that we own.
Yeah.
We get that.
Yeah.
We get the share in that growth and that reward for doing good work. What else is investing?
So the other way of investing is to actually lend money. So we can lend money to governments, we can lend money to businesses, companies. And so these things are called bonds or fixed interest. And again, these are also managed through platforms and investment vehicles. And again, they're legitimate. Things are done in a way to stop fraud, and so that you can legitimately invest in these things. But you do get a lower return. And a lower return, can be costly. So you got to weigh it up. We used to be told that bonds and fixed interest was safe. Not exactly. We have a very different world today to what we had 10 years ago and what we had 30 years ago. And where fixed interest might have worked extremely well 30 years ago, not so good anymore. There's a lot of changes taking place.
And that could change again with interest rates going back up.
Yeah, we got constant change. That's the normality of life, that it's always changing, and we got to be able to change with it. So whatever we thought worked, 30 years ago, we should just throw that out and start rethinking.
Okay, next question. Someone said here, what's the deal with ETFs and why are they so popular?
I think ETFs have become popular for two reasons. Well, actually, three reasons. One, they're real easy to sell. So they've created these platforms and these ways of people being able to buy these ETFs and buy them through your normal ComSec type platforms. Just the same as buying shares, you can just buy them easily online through a trading platform. And and they're easy to sell. Like there's heaps of YouTube stuff and all sorts of things out there that make them look fantastic. And there's something new, so people are attracted to them. The other thing is they're giving people access to some things that they mightn't have had access to before. Things like precious metals, gold, indexes that have become really popular around the world that people want to invest in. So it started to give people access to stuff that they couldn't access before. Not that we're saying gold or precious metals are an investment. We're definitely not saying that. As we said before, they're something that gets traded, and so not something. But people want these things, so they create something whereby you can buy them, and they're really cheap. So again, people don't want to pay fees, so they're really popular because they're cheap. The problem with them, there's problems with them, but the biggest one is liquidity. Actually being able to sell out of them when you need to. That's the challenge with them.
We'll be back in just a tick. Hey, just a reminder that everything we're discussing today is for education purposes only and does not consider your personal financial goals or situation. If you're looking for personal advice, we highly recommend you sit down and speak to a trusted financial advisor and get that advice and support to implement a personal plan that's tailored to your goals. All right, now that I got that off my chest, let's get back to the show. Okay, we've got 3 more questions. The next question is around super. So one question was talking about we've got all these big super companies or super funds are merging together and creating bigger super funds. So the question is bigger better when it comes to super, and what should I be looking for in comparing and choosing a super fund?
Yeah, this is an interesting question because often bigger means there's a lot more money being invested, and with the rules around what we can actually invest in, these bigger super companies will be limited in what they can invest in.
They could potentially get locked out of some really good investments because if they put their drop in the hat, it could flood the percentage of what they actually own of that business because they're so big.
Well, in a way, they're getting so big that they're starting to take over the businesses.
Oh, wow.
And when they take over the businesses, they're no longer a super fund investing in a business. They're now running the business.
Oh.
Super funds aren't meant to do that.
Especially when their objective is to achieve a great return and they're comparing themselves against other people. That could be a clash of motives.
Yeah, it's harder to compare them. It's harder to know what they're actually investing in because they start to move into private equity and will start to do very much alternative assets and alternative investments. So it's a bit like a black box. We're not sure what's in there. We've actually found in the past that some super funds have nearly failed because of the black box where they've done this in the past. And they thought they were going to get these fantastic returns for their members, and it actually went the opposite way. So it can become too risky because of what they're doing, and they're not sticking to the straight investments that they should be sticking to. Because if we stick to good investments where the market is liquid, where everything's known, everything is managed, and we have that integrity, minimizing any fraud that can happen, then we know that we're going to get those returns, that we know that people's super safe. So that's the question we've got. They can definitely get cheaper on their fees with a lot more money being invested, but generally what we tend to find and what we're looking at from investment companies from America and Europe is that they actually start getting lower returns because they have to start investing in bigger things, and those things will generally give us lower returns over the long term.
Okay, so bigger doesn't always equal better.
No, so the big ones in Europe and that are getting, they're happy if they get like 2 or 3% return.
No.
And we're used to a lot better return than that.
We'll have to do another episode on super. I think there's a lot to talk about when it comes to super and choosing a super fund. And just remember, this is not personal financial advice.
I think the great thing about super is that we have a lot of choice in Australia. Like the government's done a fantastic job of giving us choice. Other countries, they don't get the choice.
True.
And so it's amazing what we've got, and we should really appreciate it, because once you start getting advice, there's lots of different options that you have, and you can determine what your risk is, and how your money's invested. And other countries don't get that option.
Yeah, lots of great options, and we can align those to our goals and make a great decision. We're really lucky. Great place to be. Okay, not a great place to be would be in Bitcoin. The next question is, why is Bitcoin crashing again, Archie? Can you get out your crystal ball and let us know?
Well, back to what we said at the beginning. It's a currency. It's traded. It's not just traded by us. It's traded by whoever's using it, and it's speculation. So depending on perception will depend on what its value is. And someone's going to win and someone's going to lose. So, and if you start playing with it, you're either going to be a winner or a loser. And if you're a winner today, tomorrow you could be a loser. So it's just what it is. It's the nature of the beast.
And, there are people claiming that it's a store of value for when the share market goes down, it goes up. But in recent times, actually, we just looked it up before, it's very much been following the market. It hasn't been holding against any swings in the market. So it just seems like it's tracking along like the rest.
Yeah, because again, it's perception of value again. We're always going to have that, determination that people are going to make is am I getting value out of this? No. Hang on, over here looks really good, so I'm going to put my money over here now. Take money out, move it somewhere else. Yeah. So it's just all about that perception is always going to change the value of it.
Last question is, someone said they loved the $1 Million Car episode. That was a couple episodes back, if you had listened to that. It's about replacing your car loan with an investment vehicle to build wealth. Someone asks, is this something I can set up myself, or should I speak to someone like a financial advisor to get that set up?
Yeah, great question. It looks so easy to do, but we're people. And wherever people are involved, it's not easy. Because as people, we're emotional. Today we're gung-ho, tomorrow we're not. And if we look at three things, that we change all the time, one is the gym, two is tax, and three is the way we invest our money. And and the thing is, if you just go to the gym yourself, there's a good chance that you probably won't get there tomorrow, because tomorrow you'll just go, I'll do it tomorrow. And if we decide to do our tax ourselves, quite often we'll be saying the same thing, I'll do it tomorrow, but then we don't do our tax, get there late. And it's the same with investing. It's like, it looks easy. Yep, seems like it's something simple to do. The whole thing makes sense, and we go, great, I'll do that tomorrow. And we just don't do it. We just keep putting it off. And life's always changing and happening. And we, today it looks great to us, and then tomorrow we go, I'm not really sure whether that's going to work for me. Like, because we can forget so fast, something that looked great, by tomorrow we've forgotten. And the longer the time goes by, the less likely we are to do it. And so I meet people that have said for 40 years, I'm going to invest. And 40 years later, they haven't invested. So, that's why we need a financial advisor, someone that's going to implement it. That's the big one.
Someone to keep us encouraged as well, and know that we're on track. Help us measure the progress.
And someone that knows that the systems are secure, that everything is okay. Because, we can jump in and look at something and go, gee, that looks like a good investment, and then find that it's not an investment. We're easily caught out. And we need that confidence. Like, generally we'll only keep going with something if we're confident and we can feel like we're on a winner. And as soon as we don't, feel like we're on a winner, we'll start changing things. And that can be the worst thing to do when it comes to investing.
Yeah, so good. Okay, well, I think that's all we got time for today. So we'll have to stop it there. But thanks for your questions. Keep sending them in and sharing the show with your friends and family, everyone. We really appreciate it. So just go to waymakerpodcast.com.au. There's a link in the show notes. We'd also appreciate your feedback, so leave us a review. And we'll do more of these Q&A episodes again soon. Next week, we're going to get back into... We're going to be talking about interest rates, actually, and how they may affect you and what you can do about it. So that's coming up in the next episode. So make sure you're subscribed wherever you listen to podcasts. Thanks, Archie.
Thanks, Lachlan. Thanks, everyone, for listening.
Thanks as always for listening to Mind Over Money, where we help you change your mindsets around money to live a life of greater freedom, generosity, and joy. We'll see you next week.